What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell for me so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers. So please be careful. Don't get yourself scammed. If you want up to 12 free stocks, Webull is going to give you up to 12 free stocks. When you open a new Webull brokerage account, put at least 1 penny in that account. They're going to give you up to 12 free stocks. So if you're interested in that offer, there's a link down in the description box of the video. Click on that Webull link, open up your new account today, go get that free stock, go get that free money. Well, in today's video, guys, I wanted to give you sort of a recap of what's happening in our economy, what's happening in our stock market, and what's happening in our real estate market. So let's start with the economy. Well, the economy is still experiencing high inflation. We saw the numbers earlier in August for the month of July. And July's inflation numbers were 8.5%. You have to understand, guys, really inflation should be somewhere between 2 and 2.5%. So we still have a lot of work to do. But that's one of the reasons why our economy is still in trouble. And we are on the brink of a deep recession because of inflation. And earlier in this week, you had one of the Federal Reserve policymakers come out really hawkish on the economy, simply stating that he did not believe inflation had peaked. So that sent shockwaves through our stock market. And we'll talk about that in a second. But that policymaker simply stated that, hey, he doesn't believe inflation has peaked and we're still in quite a bit of hot water when it comes to inflation. So, hey, whether that's true or not, it sent shockwaves through our stock market and caused our stock market actually to sell off towards the end of the week. Thursday and Friday of last week, it sold off. So the prior week, the stock market did so well. We had made a lot of gains, but part of those gains were lost, like I said, in Thursday and Friday trading because of that news from that Federal Reserve policymaker. Also, when we look at the economy, we have to also look at our labor market. Now, the labor market is still strong. And I've said this in other videos. That's one of the reasons why our economy is still doing well, is because people have jobs. Wages are still there, right? The question, though, we got to ask ourselves is, at what point does the labor market start to deteriorate because of these inflationary pressures, right? Because in order for inflation to come down, people have to stop spending, right? They have to, across the board. And a lot of times when the only way people will stop spending in some instances is if they don't have a job. And I think that's where we'll see some cooling off in our labor market, because we have to, because that's probably the only way we're going to get people to stop spending, right? As long as people got jobs and they got good wages, they're going to keep spending. That's just the way our economy is set up, because 70% of our economy is through consumer spending, right? It's supported by consumer spending. Now, I will tell you this, though. See, wages, though, are not keeping up with inflation, right? So if inflation is 8.5%, wages have to be higher. An increase in wages have to be higher than 8.5%. And that's not happening, right? So inflation is 8.5%, but wages are not increasing at that same rate. So that's going to hurt us as well. And you know, strong labor market, gonna have to cool down. Fed is gonna have to continue to increase short-term interest rates, which we believe they will do in their September meeting again for the second time in the third quarter. They're probably gonna increase short-term interest rates again in an effort to try and fight and push down inflation, right? So it'll be interesting in September when we get the August year over year CPI numbers to see exactly what inflation did in August, right? Year over year. That will help us understand a little bit better if inflation has truly peaked or if it has not peaked. So stock market, let's move to that. Like I mentioned, the stock market a week ago was rallying pretty strong, right? We hadn't seen the Dow over 3,300 points in some time. All three major indices were doing well. They were all rallying. But again, on the news that one of the Federal Reserve policymakers didn't feel like inflation had peaked, obviously that spooked the market and started a light sell-off, which took back some of those gains from the week earlier. So yeah, man, the stock market, you're going to see that, in my opinion. You're going to see it have a little bit of bounce. And then if we get some bad news that is not priced in, investors haven't priced in, then you're going to see a pullback. We're going to keep seeing that, that back and forth, because until you get inflation down, our economy is not safe. You got to get inflation down. So I keep telling folks, I don't care what's going on. If inflation is 8.5%, if inflation is 7.5%, the stock market will not fully bounce back, and we won't fully recover until we can get inflation to a point where it's continuing to go down rapidly, right? Where we can get it at that 2 to 2.5%. So as you look at your portfolios, guys, don't be alarmed when you see a nice spike upward, but then you see some of that, that gain disappear in a matter of a few days because we got bad news that wasn't priced in, right? So don't be alarmed. All you got to continue to do is dollar cost average in, because you got to understand this is a 2 to 3 year window where we're going to be in limbo with the stock market, with the economy. I think in 2 to 3 years, the economy will get inflation down, and then we'll see the economy start taking off again, a healthy economy taking off. And then I think the stock market will also take off as well and be more consistent, right? That's my opinion. What's going on in real estate? 6 months in a row, we've seen real estate sales decline. So prices are still firm and holding on, but sales volume is decreasing. Why? Because people are unsure about what's going on with our economy. People are starting to say, well, interest rates are sky high. We don't know what's going on with the economy. I don't know if I want to make that commitment to make this large purchase of buying a home. I don't know if I want to make this commitment of putting my house on the market to sell it, and not sure what I'm going to do when I do sell it. So that has slowed down sales. Like I said, though, prices are still holding steady. And the reason prices are holding steady is because we don't have a lot of inventory on the market. If you look at what's happening with builders, they're starting to say, hey, we're still running into some supply chain issues. Plus, we're not sure if we want to go out on the limb and start building all this inventory and we don't have any buyers for it. So I think builders for new construction homes are saying, look, we're not sure about the economy. We're not sure we want to build these homes and not have buyers. Plus, we're still running into supply chain issues that are driving up the cost for materials. So no new real impact from new construction starts. And then coupled with that, the economy is not doing well as it relates to inflation. Also, the ability to borrow money is more expensive because 30-year fixed rate mortgage rates are up. All of that coupled has really cooled off our housing market. And it's going to continue to do that. Again, I think everything comes back to inflation, right? Everything comes back to inflation. If people don't feel comfortable that they are in a position to win financially, then people are not going to want to buy houses. People are not going to want to do the things that they would normally do in a healthy economy. So that's my little 2 cents, guys. Again, I'm no expert in this. I'm just a guy on YouTube giving you my 2 cents of what's going on with the economy, the stock market, and the real estate or the housing market. You go out and do your own research and make your own decision. I am in a situation where I'm going to just continue dollar cost averaging in when it comes to the stock market, no matter what the economy is doing, no matter what anything's doing. I just dollar cost average in because I know the history of the stock market. History of the stock market tells me this: if I dollar cost average in over a long period of time, I win. I win, period. I win. So my goal is not to be short-term thinking. My goal is to be long-term thinking and just continue to plow in my money into the stock market through dollar cost averaging, buying my favorite companies, favorite ETFs, and my favorite cryptos. Just keep buying them. And think about 5, 10, 15 years from now, if you do that, man, you're going to build so much wealth. You're going to be happy with it. So drop me some comments and let me know what you guys think, what's happening with the economy, with the stock market, with the housing market. Love to hear your feedback through the comment section. So if you want those 12 free stocks, click on that link down in the description box. Sign up for Webull today, man. Great self-directed brokerage app, right? No commission trading, automatic investing capability, fractional share trading capability. Don't miss out on that offer, man. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. And I'm going to catch you on the next video. Peace. Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.